serious problem nowadays. Yes, when I turned to the literature, I found, okay, especially like Samlani and Sain in 2012, they reviewed dozens of papers, okay, about the workplace bullying. There's some other names for the workplace bullying in the business research or organizational research, and they classify different accidents and consequences of the workplace bullying in the reality. So I follow their thoughts covered in their review paper, and they go on with the examination on Chinese situations. So how about China's accounting profession? That's what I experience a lot, okay, in my domestic market. Audit markets in China is growing, and also the professionals in auditing and accounting is really demanding because our economy is developing very fast. And workplace bullying has been a very bad factor, okay, to the development of those professional organizations, even though the economy as a whole, okay, demands for a large profession in auditing accounting. And also a few years ago, an co-author and I get some study on the organization culture in the auditing firms too. I get that one is also close, okay? It's a serious research. I observe all these issues throughout the past 5 years. So this is about my observation about the accounting profession in China. And the relevant research in Chinese academic journals, we noticed that in English journals, there are many papers, business papers, business research papers focused on the workplace bullying issues or corporate psychopath issues, the negative acts in the workplace issues. But in China, the academia, I searched for the similar topics in the most well-known academic database in China. Is a Chinese National Knowledge Infrastructure. That's well-known for our researchers, CNKI. They produced only the very few papers, only 76 papers for workplace altruism, and 22 papers in code violence in the workplace. So that's the phenomenon. I mean, that's the reality in the research in Chinese journals. And what does this study cover, or what do I do care here? Okay, this study focuses on whether and how organizational ethical climate affects the workplace bullying in the Chinese audit firms, especially in the perception of the new entrants to this profession. So this study has made 2 major contributions to the existing audit firm literature. Extensive organizational studies on the ethical climate in audit firms. That's covered in paper Schaefer 2008. And it extends the gender roles. So with the survey, with those among those participants in the workplace activities by those young entries, the gender plays an important role. It means the difference between the gender difference between the leadership and the followers or subordinates. So they show some impacts on the young professionals' perception of the workplace bullying. So that's a very new perspective that I contributed in this paper. Now, the second part, I would like to cover the key concepts, literature review, and research hypothesis that I developed. So the 2 major key concepts, I will just mention it very briefly. The first one is workplace bullying. And it's not a direct instrument to measure the workplace bullying. So I used the widely accepted measure. It's called an NAQ, the Negative Acts Questionnaire, which is developed in the Balutala and Oz 2009. Okay, that in their paper, they developed this measurement or questionnaire. So I used this one, I adapted that into Chinese circumstances, and I found this quite feasible, okay, to measure the workplace bullying in both in their original design, there's a 3 dimension, but in in my research, I reduced them into two. One, there's work-related and person-related measurements of the workplace bullying in terms of elective acts questionnaire. That's what I did. And next one is the ethical climate. So ethical climate is not important. It's widely well-developed, design for the measurement of the ethical climate. I will mention that later in the methodologies part. And the next part in this section is the literature review. So I divided the entire literature review into two parts. One is the general impacts of the ethical climate on workplace bullying acts or perception by the young professionals. The other part is about the impacts of the different ethical climate types. With the survey on the ethical climate, they designed subtopics or subdimensions of those general ethical climate, again, nine dimensions. So I examined the different ethical climate dimensions and their impacts on the workplace bullying effects or perception. Now, this is the literature review, and the next part is about the research hypothesis. So I have three, including the published paper. The published paper is reduced one. Originally, there's a large size. So upon the request of the editor, so I reduced the research or the report into the limited. So limited to three aspects of the hypothesis. One is about the general, the general sense. So the first set of research hypotheses are developed in general. That means hypothesis 1A, the self-perception type of the ethical climate is possibly related to the workplace bullying. And second type is the profit type. The third type is the efficiency type. I mean, this is in general, the three major types of ethical climate, how their relationship or association with the workplace bullying as perceived by the training auditors, the young professionals. And second one is more detailed, the professional, the friendship type, the interest type, the team interest type, the social responsibility type. Based on the review of the existing literature, I assume that the correlationship among these different types, organizational relevance type, and ethical behavior in workplace perceived by the young auditors. And the next group is the principal ethical climate dimension and workplace bullying in audit firms, as hypothesized here. So those are research hypotheses I mentioned. I put in my research, the paper reported there, published there, and methodologies used to make this study or this research workable is based on a questionnaire survey, which I administered among 205 accounting interns. There are three grade 3 in total. Normally in China we have 4-year program. So these young interns are 3 years, grade 3. Okay, there's grade 3. They're not graduate, they're not 4th-year students. There's a 3rd-year student, and this is the arrangement by the university, and officially the students were placed into the workplace, like audit firms, big firms or small firms. So to guarantee the true presentation of this young professionals' perception about the variables in the study, I guarantee the anonymity. That means the people don't have to report their names in the survey. And also I did a pilot study before the questionnaire was administered among them. And this is a questionnaires instrument. I just summarized that, and a very brief description. And study variables, based on this questionnaire, we adopt the 3 dimensions of the dependent variables about the workplace bullying, and the explanatory variables, independent variables, are actually written based on the 9 sections or 9 subdimensions of the instrument for ethical climate of the organization. And also I included the control variables like the gender difference, the firm size, the team, the project team size, and also the gender of the reporter themselves. The reporters
Excuse
themselves.
me, sir. You have 5 minutes left.
Okay, thank you for reminding that. So I will run very quickly. So the regression models, based on those various the studies on variables, then I used the three models, regression models, and this is results. Okay, the most exciting part for me, okay, to check all the research work, and then it turned out to be some phenomena that attract me to write a report and report that to our colleagues, okay, in the same academia community. So this is the result for Boolean. I mean, in general sense, we didn't differentiate between the work-related and personal-related. So the model 2 is about work-related workplace bullying. The third model is about the person, okay, the person-related. So this is a brief presentation in a table about the empirical results for the tests, the test for the three groups of hypotheses written in the paper. Now this is the results. I mean, for the first set of hypotheses in general workplace is the only 1A was supported. Okay, that means this finding is consistent with the document with the conclusion in Anderson and others in 1994 about the self-interest climate, the ethical climate, encourage people to sacrifice their colleagues' interests for their own. Okay, thus increasing the negative acts in organization. Another one is another group of result is 2A and 2B are supported. And for the third set of hypotheses, 3A and 3C, they are not significant, but they show the right direction. And more importantly, 3B is significant, but the direction is the opposite as the existing literature, the conclusion there. So, and also the further studies in this investigation are divided into the two, as I mentioned in the description of the variables. So we divide the concept of the workplace bullying into two parts, or three parts. Okay, that's the result reported there. So that's the conclusion. So the conclusion, in general, not all types of organizational ethical climate significantly affect the perceived workplace bullying by the young auditors, okay, in the firm. The self-interest is self-interest and the social responsibility and firm rules and procedures types of the ethical climate are possibly correlated with the workplace bullying in general sense. And last point I want to highlight here is the female training auditors are more sensitive in perceiving both the workplace bullying in general and also the person-related bullying than male peers. So that's a very important and very interesting finding in my paper. I think thank you very much. If you have some extra time, we can share more and discuss on this similar topic, very interesting, in our Q&A time. Thank you very much.
Thank you very much, Dr. Anthony, for the inspiring presentation. Thank you. And for the second presentation, it will be delivered by Dr. Reginald Masimba Bona with topic Financial Statement Analysis, Principal Component Analysis, PCA approach, case study on China telecom industry. Dr. Reginald, time is yours.
Hello?
Yes,
You can hear me?
you can start, sir.
Okay, thank
Yes,
you.
sir.
All right, thank you. So, my name is Reginald Mbona, and I'm from Jiangxi University. I just finished my master's degree. I'm not a doctor yet. And I'll be presenting on the topic Financial Statement Analysis, PCA approach, case study on China telecoms industry. This research was published last year in August, and I'll be presenting on it for the next 10 to 15 minutes. So the contents of my presentation is as follows. There is an introduction, and then we'll introduce the China telecoms industry, and then we have a literature review, a research gap, the objectives of the study, the methodology, the results, the contributions, and the conclusions. So financial statement analysis using ratios has been one of the most commonly used um, models of analyzing a business performance. It is one of the traditional ways that is used to assess a business performance. It assesses firms' performance by comparing it to other players in the industry, as well as by comparing it to other firms that are outside its industry horizon. The biggest problem that we face with ratios is how many of these ratios are enough to reflect a full picture of the business. This is one of the challenges that is there. And in addressing this, we have to find the best mix of ratios, which is why I had to carry out this research. The measurement of the financial ratios of the company reported through financial statement gives the qualitative analysis of the company's position, as well as an account of how the company has utilized its capital in production. Financial performance analysis involves using reported results from financial statements to obtain quantitative performance and the characteristics of a company that are determined by the management to show its efficiency in the use of given resources. This means that we need to get the accurate analysis of the liquidity, profitability, and the other factors that affect the business as a whole. And in introducing the China telecoms industry, over the years, we have seen the telecoms industry grow to be part of the biggest backbone of the economy. Given that China is well dependent on the internet, and China uses a lot of internet in their daily lives, they have to have a very strong telecoms industry. And they have the largest subscriber base, of course, because they have the largest population. And their industry has also been attracting a lot of investment within and outside of China, as well as attracting a lot of global attention, with its players having to be recognized across the globe. And so I use three major players in the telecoms industry, which I believe are very much representative of the general population. And these players are China Mobile, which is listed in Hong Kong and in New York, and is the largest by subscriber base. And then China Unicom, which is also the second largest by subscriber base. And it was formed in 1994. It's the oldest telecoms industry company in China. And then China Telecom. The first two are mobile based mostly, and then the last one, China Telecom, is the one that specializes in fixed and broadband products. And in the literature review, we find that there is a support by Bhargava in 2017 when he studied the Indian telecoms industry, and he emphasized that there is need for constant measurement of this industry, especially given how it's contributing to the economy as a whole. And a study by Allen and another one by Puja also emphasized that factors within the control of the management are very important in assessing, because they are key in seeing how management is considering the economic impact of their decision on the companies. The research gap that we found is that, firstly, there is no Chinese related study so far on the ratio analysis using the principal component analysis, especially after the Chinese government opened its doors to foreign competition and investment in this industry upon joining the World Trade Organization in 2001. And a study by Taylor in 1996 focused on Australian firms. The study did not point to a specific industry, hence the model might not be a one-size-fits-all. and also that the model only retained 64% of the data, which means it might not be fitting well in some industries. And then third, the PCA allows us to use at least 18 ratios, which means that we reduce subjectivity effects on which ratios should be used for further analysis, which include regression analysis on performance and also on the investment decisions by various investors. The objectives of this study are to carry out PCA using 18 ratios, and then secondly, to analyze how the components are related to each other. Thirdly, to recommend a combination or mix of ratios that best analyze and assess performance. And then lastly, examine which ratios will have the highest variation and assess their impact on the industry. We use the PCA method as earlier mentioned, and according to the literature, this has been used to reduce the volume of data so that we remain with fewer variables, and we create a new set of artificial variables which are independent, since we assume that the variables will be not be very independent given that they all come from the same statements. And so we end up having variables that are correlated. So we now create independent variables which are artificial, and those variables can now then be used for regression in future studies. This is the equation that we followed, and the variables are outlined as this. The first principal component combines the variables that have the maximum variance amongst all the combination, and much of the variance is taken in this component. And then the second combination likewise takes also the maximum variable until we have the maximum variation that we want. The data was run over 17 years, and it was taken from published financial statements, and it was run using SPSS. So these are the ratios that we initially used, and we divided them into six classes. There's the profitability ratios, the liquidity ratios, management efficiency ratios, leverage ratios, valuation and growth, and then cash flow indicator, then the tax related ratios. And so in extracting our components, we extracted 4 components, and they have a total cumulative variance of 85.5%. This is far much higher than the initial one of 64 that was done by Taylor. And also secondly, we find that Taylor's own PCA had only 3 ratios. That is, it only extracted 3 ratios, but in our first attempt, we extracted 7 of them. And if we get close to Taylor's own, we have 10 ratios, which means his mix of ratios was too narrow, which might probably be because it was not focusing on a specific industry. And so at the end of the regression that we ran using the software, we got this outcome, and these are the ratios that we have at the end. The final ratio mix has 12 ratios in total, and all these ratios need to be used together as a combination of ratios that assesses the performance of the companies. And so we have 3 profitability ratios and 3 valuation and growth ratios. We have 2 liquidity ratios and 2 management efficiency ratios, then 1 leverage and 1 cash flow. Of particular interest in this research is how valuation and growth is very important to the performance of the company, especially the relationship between customers and the revenue that the company earns. It's a ratio that is normally neglected in the analysis of a business, but this is one of the ratios that assesses the interaction of the company with its external environment. And we see that it has been given a very important role in the PCA analysis that we carried out. And so as investors will be looking at the Chinese telecoms industry, it's very important that they analyze as well the relationship between the revenue and the customer, and that ratio is very key. And secondly, we also see that worker turnover is also important in managing the companies. This is one of the ratios that is key, especially in a setup where it's a service industry. Revenue per worker is very important. At least we end up having more workers and lesser services or service revenue. And so these are two interesting findings that I had, and they are key to the investment world.
Excuse me, Doctor, you have 5 minutes left.
Thank you.
Okay.
A combination of 12 ratios can give a meaningful conclusion about the industry and can effectively analyze operations of a firm. The study helps stakeholders know how to monitor company performance from bulky statements, especially given that most of the statements now are now being prepared using the sustainable reporting system, where they have to include a lot of other factors. And so we have bulky statements, which might be very much boring and tiresome to read for most of the investors. Then the study helps to reduce bias on which ratios are to be used best in assessing a company using financial ratios. This also applies for researchers who want to pick up ratios to use for their research. They now know which ratios are best to pick and which ones are not biased based on their personal judgments. In conclusion, we find that we cannot look at these factors in isolation. They are correlated and they are all combined when assessing the overall performance of the industry or individual firms. And in future, we recommend that we assess how ownership structure affect the ratio mix. This is one of the things that is key in the telecoms industry, which is a strategic industry mostly owned by the government. And we have to assess how different ownership structures, for example, in the US, it's predominantly plagued by the private sector. And in most developing countries, it's plagued by the government. And so in future, we recommend that we assess how ownership structure, the difference between government ownership and private ownership, and how it affects the way the ratios will be picked and the mix of the ratios. This is the end of my presentation. Thank you very much.
Thank you very much, Dr. Reginald. And let's move to the final presentation. Please welcome Dr. Waqas bin Hikmat to present his thought about the value relevance of R&D and free cash flow in an efficient investment setup, evidence from Chinese A-listed firm. Dr. Waqas, time is up.
Can you listen to me?
Yes, sir.
Okay. Thank you very much. The platform of Asian Journal of Accounting Research for giving me the opportunity to present my research, again share it with you people. So basically my research is about the value relevance of research and development and free cash flows in an efficient investment setup. It is an evidence from Chinese A-listed firms. So basically during my PhD, I have done this work. After completion of the PhD, now I am the head of department in the Air University Aerospace and Aviation campus, Camera. So you can say I have the two affiliations. So what is the agenda of my presentation is that, first of all, I will tell you about the value relevance, why free cash flow and research and development expenditures, they are value relevant, and specifically those firms which are investment efficient, are those valued higher? So this is the first agenda and first hypothesis actually. Then I will run towards the value relevance of research and development and free cash flow of investment during the life cycle stages. You know the firm life cycle stages, there is a growth stage and maturity and then stagnant stage. So is there information content different in all these stages? This is the second hypothesis which I'm going to discuss in this presentation. The third is the value relevance of research and development and free cash flow investment in the product market competition. There are a lot of studies which have suggested that product market competition is a substitute to corporate governance. It means that the information content may be different in the companies which are operating in the market competitive industry rather than the concentrated industry. Then I will discuss briefly about the methodology, what are my results, and then I will conclude my research agenda. So let us discuss the value elements of earnings and book values of free cash flow and R&D. So basically, this research has started back in 1968 from the great paper written by Ball and Brown in 1968, that they said that the accounting number, actually they have some information, and people, they use this information to invest, and stock price generally incorporate this information.
Excuse me, Dr. Waka, sorry. Will you share the screen, your PPT, or you just explain without?
No, I think I'm not sharing it. I think wait,
oh, you can explain by yourself. It's okay. Okay. I'm afraid that you just forget to share or something. No?
Oh, sorry. Yes. Wait a minute. From where I can share it? Wait.
In the lower part, you see the share screen button.
Yeah.
Yeah, and then you can share.
Okay. Thank you very much for interrupting.
Okay.
Now you can see.
Yep. Yes, sir.
Okay. Thank you very much for that. Okay. So the value elements I was talking about, the Ball and Brown paper that was in 1968, the paper, that accounting information about the accounting number has some information. So the value elements refers to the usefulness of accounting information, and it is defined as the ability of the financial statement or information to influence the stock prices. So there is something in the financial reports that can be used to interpret that information in the stock prices. So according to Bowman and Sharma, value element studies examine the relationship between accounting information and stock market values. So in an emerging market like China, there is a very little or scarce literature regarding the value elements of free cash flow and research and development. We can see literature regarding value elements only of book value and earnings, but as long as the free cash flow and research and development is concerned, I find no literature or very scarce literature. So why research and development expenditures? They are important, and free cash flow. So these are the two sources that are regarded as the gauge to measure the information asymmetry. We all know the agency cost. So the manager, they have the discretion on research and development and free cash flow. So they can use this information of free cash flow and research and development for self-empire building. So there is, so if the free cash flow are not invested efficiently, so it means there's an agency problem there. So Jensen 1986 proposed the free cash flow hypothesis from the perspective of the agency cost. According to him, the opportunistic manager, rather than investing in free cash flow in positive NPV projects, utilize the fund for dispensation for his own use. So again, Rahman and Mohammed Salah, they elaborated that firms with high free cash flow. So if you have high free cash flow and lower growth opportunity, so this is again an agency problem, because there is no growth and the manager are taking care of the free cash flows, are holding the free cash flows and not distributing among the shareholders. Again, this is an issue. Though, so firms that are reporting free cash flow in their financial statement are increasing over time. So free cash flow over time is increasing in the financial statement. So it means that there is some relevance of these free cash flow in the financial statements. And similarly, the Chen et al., they studied the effect of free cash flow and corporate governance on firm investment level in China. So free cash flow and investment. So the results suggest that agency cost is present in a firm having higher level of free cash flows. So if you have only higher level of free cash flows, you have the agency problem. So one thing is clear, that free cash flow brings the agency problem as well. That's why I have bring into the picture the investment efficiency with the free cash flow. The firm investing efficiently, maybe they have the good information content regarding their financial statements. So coming towards the second part, the research and development expenditure. So research, and again, it is a discretion by the manager how they capitalize the research and development expenditure. So capitalization of research and development has its own merits and demerits. The opponents suggest that R&D expenditure capitalized by the financial manager. Again, it's the part of the financial manager, so discretion is there. Give them the opportunity to write off negative NPV projects and high risk ventures. So R&D is basically related with the high risk ventures. So the proponents think that the value relevance of R&D is higher when the amount is capitalized, because in this way financial manager realizes the intangible assets. So there is proponents of R&D that R&D should be higher. Some think that it should be lower, but I think in this research that R&D should be matched with the investment efficiency. If the firm is investing efficiently, then this R&D doesn't bring the agency problem. So then what is investment efficiency? So the investment efficiency can bring a positive signal about the firm utilization of free cash flow and R&D, which I have discussed before, that free cash flow and research and development, they can bring the agency problem, but investment efficiency can signal positive about the firm. So according to Biddle, firms with investment efficiency are characterized as either, sorry, is somebody, are you listening to me?
No, it's okay, sir.
Okay. According to Biddle, firms with investment efficiency are characterized as either having accounting quality or reporting quality. So again, financial statements are matched with the investment efficiency. So the basis on of all this discussion, the first research hypothesis which we can devise is that efficient research and development expenditure and efficient free cash flow are value relevant in Chinese A-listed firms. So not only R&D free cash flow, they should be efficient, investment efficient firms. So this is the first hypothesis. The second hypothesis is regarding the R&D and free cash flow investment during the life cycle stages. So going all towards back to the Anthony and Ramesh. So according to their research, the market reaction to capital investment and sales growth varies across different life cycle stages. So what were these life cycle stages? These were explained by Black in examining the incremental effect of life cycle stages. He divided the life cycle stages into 4 categories. This is the startup, then growth, maturity, and decline. So while cash flows were split into operating, investing, and financing activities, and he found out that there is an incremental effect on each and every stage, has different incremental effect. So Black 2003 recommended that although profits are more value relevant than the cash flow measures, yet they depend upon the life cycle stage. So it means that the information contents on each stage is different. For example, if it is a growth stage, maybe company is utilizing more cash and they're incurring more research and development expenditure. When it is on the mature stage, maybe it has been stabilized, and then on the stagnant stage, maybe there is more agency problem in that firm. So at each and every stage, the information content of these free cash flow and research and development expenditure by the firms may have different values. So the hypothesis 2 is the information content of R&D and free cash flow varies across different life cycle stages. So I divided into 3 stages. So the last hypothesis is built upon the product market competition. So the market where corporate governance is weak, the product market competition act as a substitute and firm value is enhanced. So the point is that R&D and free cash flow investment in the competitive industry has different information content rather than in the concentrated industry where there is only monopoly power by a few firms. So by using the firm year observation from 1990 to 2010, Lakshman and Yang 2015 conclude that competition on the one hand increases the risk-taking activities by the manager, while on the other hand, it also enhances the investment efficiency. So the competition, it enhances the investment efficiency, and investment efficiency of research and development expenditure and free cash flow, they will be valued more in the competitive industry. So my hypothesis 3 would be the information content on wait. The information content of efficient R&D and efficient free cash flow are more value relevant in competitive industry than concentrated industry. So what was my methodology during this? The sample selection, Chinese real estate firms are selected. The year is from 2008 to 16, and we use the 4 months after the closure of financial statement date because of the unobserved information to adjust the unobserved information due to herding behavior. So model specification, the first model is based on the Olson model 1995. So price is basically is equal to book value and earning per share. So this is the first model. Then we extend the this model, Olson model, and we incorporate the free cash flow investment efficiency and research and development investment efficiency in it. And the last model is the book value more value relevant or the earnings more value relevant? So earning per share, we multiply it with the free cash flow and R&D, and the earnings per share with the R&D and free cash flows. So overall summary statistics is our sample, it comprises of basically 19,273 firms, but over the time it decreases because we have taken the R&D firms with investment efficiency. So according to Biddle 2006, we have categorized the investment efficiency into 4 quartiles, and we've taken the middle 2 quartiles. That is why this 10,317 is almost a half of the number of observations in the actual sample. Okay, value elements of earnings, book value, and free cash flow. So look at this, we have earning and book value are value element. They are in Chinese firm, we have a positive impact. If we see the free cash flow and R&D, they are again value relevant. So which is more value relevant, book value or earning per shares? Book value and earning per share both are value relevant in the Chinese A-listed firms. So this was our first hypothesis, that as the free cash flow and research and development value relevant. So from the table we can see they are value relevant. The second was the value relevance of R&D and free cash flow across different life cycle stages. So if we see the information content, we can see the information content from the R-square values. So the R-square value in the mature stage is higher, is 0.46, although 46%, rather than in the stagnant and the growth stage. It means that the research and development expenditures and free cash flows and research and development expenditure are, their information content in the mature stage is higher than the stagnant and the growth stage. And similarly here we see the growth stage is 46.6%. It is greater than the stagnant and the growth stage. And we can also see that we have the growth in the growth stage, the R&D is more significant. So again, our second hypothesis, so on the basis of second hypothesis, you can see that the mature stage, the incremental effect is higher. Okay,
Excuse me, sir, you have 5 minutes left.
Okay. Value elements of R&D and free cash flow effect on product market competition. So if we see only the value relevance of R&D and free cash flow in the concentrated competitive industry, so we can see that 32.7% is for concentrated markets, and competitive market it is 47%. So information content is higher in the competitive market. It means that market weighs more in the competitive market and market competition. And similarly, book value and for the earning per share, we can see that again for the competitive market, we have 47.2% of information content available. So on the basis of this table, we can say that the product market competition and the firms, they are falling in the product market competition, the market values them more than the firms, they are falling in the concentrated market. So one of the reason is that product market competition is next to the corporate governance, it's a substitute, so that's why. So conclusion, the result shows that investment efficient firms, R&D and free cash flow are value relevant. I've already, we have seen it. The effect of R&D and free cash flow on the value elements of earnings and book value is also positive and significant. So the second objective was to find out whether the market compares the information contents of R&D and free cash flow. So the information contents of the value elements of the accounting information signifies that the information content 46% of the mature stage is higher than the growth and the stagnant stage, the 46%. So the market does not respond to the value elements of R&D and free cash flow at stagnant stage. So people don't care if it is on the stagnant stage, they don't value the firm. So mature firms are more stable firms and market reacts more to their book values rather than their earnings. So in the last we explore the value elements of R&D and free cash flow investment in product market competition. So using Hirschman index, we find that product market competition is more value element. So the explanatory power measured by R square value for competitive industries 47% is greater than the concentrated industry. So the last slide study contributes to the literature of value elements by adding a new measure of R&D and free cash flow by keeping in view the efficient investment. The results show that R&D and free cash flow are value relevant in Chinese firms, and R&D and free cash flow are priced differently at different life cycle stages. So that's all from my side. Thank you very much. Over to you, ma'am.
Okay, thank you very much, Dr. Wakos. Okay, thank you very much for all of the speakers for the presentation and great sharings. Now it's time for Q&A session from the participants. As you have read before, that you can raise hand in here, and then I will let you to speak or to ask to the speakers. Okay, anyone? Anyone want to ask something to the speakers? You have no question? Really? Are you sure?
Wait, I'm finding raise hand feature first.
If not, that they will ask you instead. How about that? Just to test whether you listen to them or not. How about that? This is teacher style, sir. If you don't ask me, then I will ask you, kind of thing. Okay, anyone?
I can find raise hand.
Okay.
Wait.
So yes.
Sabrina already raised hand, ma'am.
Okay, Sabrina. Okay, Sabrina, you can ask to any one of them.
I want to ask to Mr. Wakash.
Hello.
Hello.
Yes, I can hear you.
Your paper is so interesting, Mr. Wakash. And I want to ask you, it's about the data. I'm already did a research that use like technology investment, and I have difficulties to find about the which account that I mean to the point these are R&D expenditures. So could you tell me which account in the annual report of China listed firms that show R&D expenditure? Because I'm afraid that I mistaken point what differentiate the account with other expenditure. Thank you.
Okay. In China, if you find a database, maybe Mr. Anthony Liu can also elaborate that also, that in the CSMR database, you have got the whole financial statement records, and under the capital expenditures, you have the research and development expenditures heading is already mentioned there. So whatever the company is investing in the research and development expenditure, the heading is already there, if the company is going for the research and development expenditure or not. Generally, before 2006, it was not mandatory for the firms to show the research and development expenditure in the financial statements. So if you are going looking at the data before 2006 in China, you won't find any research and development expenditure. But after 2007, the company, they tried to show the research and development expenditure in the financial statements, and now it's a separate heading in the financial records. I hope I got your question. If you have further, I can elaborate. I think this was your question, I think.
Oh, okay. Thank you, sir.
So, sir, you don't need to calculate something from various part of financial statement. They just mention that R&D expenditure kind of thing.
Yeah, yes, already it's there. You have only have to, for example, calculate the ratio of research and development to total expenditure, for example. So you only have to divide it by the total assets. So it's already given in the statements. For example, free cash flow, we have to calculate the free cash flow from the operating before income before depreciation and taxes, then add back the depreciation and all other things, and then we get the free cash flows. So something we calculate, something is already there. So if it is already there, it is okay for us to take that data rather than calculating each and everything, so that it still saves time.
Okay, thank you very much, Dr. Wakos and Sabrina, for the questions. Any more questions? Any more question? Okay. Isma, Fadila, you have question?
Yeah, I have a question for Mr. Anthony Liu. So it's interesting. Yes, it's interesting for me to find out that bullying is still a problem until nowadays in accounting firm, because I work in accounting firm too now. Yeah, I just learned that bullying can just come from work related or person related. However, if you were asked to propose the solution, how to counter the bullying from work related bullying or person related bullying, what would you propose in qualitative manner?
Thank you very much. Okay, this is I was working. When I wrote this paper and did this research for this 3 or 5 years, I actually doing the same jobs for the university at the same time as a consultant to those CPA firms or audit firms. So I talk a lot with the HR managers who are supposed to recruit young people for their audit firms from my universities. So we have a very large program for accountancy. So that's why I would like to combine my research with my work, okay, that I'm all the responsibilities that I have as my position. So for my student, I mean, I would like to provide a solution to both sides, from the university side and the audit firm side. For the audit firms, so we can talk to the HR manager and also talk to the CPA leaders, CPA leaders for the team project. The CPA leader in China, I'm not quite sure with your home country circumstances. In Chinese, okay, CPA firms, the CPA or the senior CPA in charge of the project, they will show as a good leader to the young people who follow them. So we not only talk to the manager of the firm, but also organize the regular interviews or talks between the senior managers or major CPAs and our young students in the classroom. We invite them to come into the university classrooms to share the experience, so they can establish a well-tuned, okay, well-tuned culture between the senior practitioners and the young people who are going to enter the profession. So this is one arrangement I propose to. We sign a contract and we contribute our efforts to create a good culture, especially for teams, for project teams in the future when the young interns enter the profession. So this is one way. Another way is for the university education on campus. I proposed to my university to add in some the business ethics or the audit firm culture related ethical education in the advanced or senior level of the our accounting program. You know, the auditing work, auditing course, auditing 1 and auditing 2 in my college right now will deliver it or offer to the year 3 or year 4 students. So that will teach them not only the knowledge, the techniques, the skills, but also the students must be equipped before they go into the society, go into the professional community like you experience right now. So they must get a very in-depth understanding and command of the ethical considerations, how to become a good subordinate, that means follower, and also how to communicate effectively and professionally. Okay, we believe that the audit firms is not a labor-intensive organization. Audit firm is knowledge-intensive organization or service-based organization. So if the university equipped well enough our students with those more advanced awareness, the awareness of those ethical issues, leadership, the culture, and then I think this problem could be this problem, as I studied in early, 2 years ago, starting from the 2 years ago, could be to some extent mitigated or can be completely solved by effective communication, effective coordination between the university and the audit firms. Because that's what I can, share. I would like to share with you, and also I really proudly enjoy now. Okay, doing these things, bridging. Okay, bridging the cultural differences, as well as ethical cultural differences between the audit firms and the university education, like institutions like this. Thank you very much. I hope I can get to provide you some
You're
kind
welcome,
of
sir.
sharing this. Thank you.
You're welcome.
Yeah.
Okay.
A good insight, sir.
Okay. So it's clear, Ismar?
It's clear.
Okay, thank you very much for the question and also the answer, Dr. Anthony. So any more question? Anyone? Oh, okay. Dr. Reginald Masimba Bona, it's you. You can ask something to another speaker then, please. Time is yours. Maybe you can turn on your microphone already.
Yes, thank you.
Yeah.
Dr. Wakas.
Yes, sir.
Yes, your research is quite interesting. I wanted to ask, did you find any research on how this decision on how R&D is made is come up with? Like, how do firms come up with this decision of whether to capitalize or to leave R&D just as an expense? Did you come across any research in that line?
If I repeat the question, you are telling me that capitalizing the R&D or showing it is in the expense, have any research has been done on this thing before? Is this the question? Yes. Basically, the problem is that when you are catering for the agency cost, so basically all the studies which have been mentioned, they generally use the capitalized side of a thing, because when they capitalize the expenditure, then there is agency problem. If you show it in the income statement as an expense, then it is very much easy. Whatever is coming, it's been showing in the income statement. So basically, what I have learned in the literature we have done, I have looked over the different studies, and I find only this capitalized side of the research and development. So maybe it's for a future, area, we can a comparative study between this expenditure side and the capitalization side can be done. So I think so. It can be done, but I haven't seen the study yet on the expenditure side.
Okay, thank you very much. I think I'll send you an email. I'll take your email from your paper. I hope it's there on your published paper.
Yes, sure. Why not?
Yes, I'll send you an email because I've been working on that research. I am almost half done with the proposal. So I'll send you an email, then you can update me on that.
Yes, I'm more than happy to collaborate.
Thank you. All right.
No, a very good opportunity to talk with other researcher, right?
Yeah.
Okay, so any more question for the participant? For the Dr. Reginald, actually, I have comment about the your article because it is interesting to talk about management efficiency ratios along with those other familiar ratios for me. For me, especially because usually we just know about liquidity and other ratios, but you come up with management efficiency ratios in these articles, and I think it's a new insight maybe, or you can explain more about this, why you chose this thing, why you choose this ratio in along with the rest of your ratios in the article.
Thank you. Management efficiency is one of the key things in public industries, especially given how there is an issue with corruption in most cases in companies that are owned by the government. There is always issues that relate to management inefficiencies in government-owned industries. And so the thought was that when an industry is owned by the government, we are likely to have management issues. That's what has been in the literature before. Efficiency in the government-owned industries is very low. And so we had to investigate if the managers of these telecoms are managing them as how private firms would do, and if they are efficient in their management system, and if it is still under the rule of politics in terms of management, because management efficiency also goes to how the political interferes with the policies of the companies. And we found that the management is quite efficient. And that was one of the key things that was attracting us to the management efficiency, the fact that the companies are government owned and the government still has the largest stake in those companies. And we had to find out if that affects how the management does their decision and how they make their companies run and the efficiency in the allocation of their resources.
Okay, we got it now. Thank you very much. Okay, so any more question for the speakers? It seems like there is no more question for you, sirs. And wait. Okay. Thank you very much, Dr. Anthony. For the participant, you can see the group chat. Dr. Anthony is writing something here, and you can contact him through this email. And maybe Dr. Wakas and Dr. Reginald also write down their emails here to make easier for us to contact you. Or you can just see their articles. They have the emails on there. Then you can find them easily. Thank you very much. Okay, so I think this is the end of this webinar. Thank you very much for everyone who attending this webinar. Thank you for all the speakers for the greatest presentation and sharings. Thank you also to the participants who attend this webinar. Wish to see you again in the future. Thank you very much and see you.
Thank you.
Thank you.
Thank you. Thank you, sir.
Thank you very much, Chair.
Yeah.